In most financial plans, it says you have to sell like 10 to 12 times your income in life insurance. For most child-free folks, life insurance, not as important. For my soloists, probably no need for it. What happens is your life insurance is supposed to be covering your income for somebody else that relies upon it. So if you're dinks, dual income, no kids, and your spouse could do fine without your income, probably don't need life insurance. Now people will say, I need life insurance so that they have money to bury me. That's not the same. Life insurance often takes months to claim, and your burial is not months away. There's actually burial insurance. If you want to go there, you can also prepay for things. But life insurance is one of those things that people often sell, but may not be needed.
Welcome to the Childfree Wealth Podcast, hosted by Bree and Dr. J, Certified Financial Planner. Here we discuss life and finances as it relates to being child-free. This podcast is for educational and entertainment purposes only. Please consult your advisor before implementing any ideas heard on this podcast.
Hey, Childfree Wealth listeners, we are back diving into the Child-Free Guide to Life and Money, on sale now at your favorite bookstores. You can pick it up, walk through it, but I'm going to walk you through different chapters, and today we are talking about No Baby Step 5, getting your insurance right. Now, when I say getting your insurance right, I mean you want to have the right amount of insurance, no more, no less. Like having more insurance is not necessarily better than having the right amount. You want to have what is a high-risk event insured, and you're passing on the risk. Somebody explained to me years ago that insurance is just assigned risk. It's a question of whether I'm keeping the risk or I'm assigning to the company. And I like that way of thinking. What am I willing to take on myself and what am I not? So for example, on my phone, am I willing to pay for whatever is Apple Care or one of those insurances on my phone? No, not really, because by the time I replace the phone, I probably need to replace it anyway. I actually have had it in the past. It did work, but for the amount I'm paying each month, I can put the money aside. I can afford to replace my phone. On the other hand, my car has insurance on it. Why? Because if I crash it, that's an expensive replacement. So you want to insure things that have a high risk to you. Now, what happens is, as a child-free person, it does change your needs. So like things like home insurance and car insurance, it doesn't really change much if you're child-free or not. We'll also talk in the chapter about umbrella insurance, which goes over your home and your car. You want to have that. It's called property and casualty insurance. Decent coverage. The one thing I will say on those, make sure you have decent coverage, because a lot of folks, when I look at their insurance, have kind of what I call like kid insurance, like the low coverages from back when they were teenagers. We want kind of like $300,000 coverage on your car. So if something happens, you're okay. I don't want somebody coming after all your money because you didn't have insurance. When you do buy your home insurance or renter's insurance, one of the weird ones that I tell everybody to add on is identity theft insurance. Identity theft is a big deal, and it's usually like $50 a year or something like that. And it usually gives you like a lawyer and pay some money if you have your identity stolen. My guess is you're more likely to have your identity stolen in this world than your house catch on fire. So let's just make sure we have that. Now, getting past that, let's go to the rest of the insurance. Health insurance, I'm biased, okay? I grew up, my mother was always sick. I don't get the cheap health insurance. And I generally do not advise my clients to get the cheap health insurance. You want the good plan with the good coverages. You never know what's going to happen. You know, one oops happens, and the next thing you know, you're in the ER. Maybe you have a couple overnights in the hospital. You got $20,000, $30,000, $40,000 in bills. And if you don't have decent health insurance, that's all coming out of your pocket. Don't cheap out on health insurance. As you're kind of going through your insurances, the next one that I always watch out for is long-term disability insurance. For my soloists, long-term disability insurance is an absolute must. Let me say that again. For soloists, long-term disability insurance, absolute must. You are relying on your own income, and if you get disabled, which that's not like about a third of people across their life will have some type of disability period, you need something that covers your income. Usually it covers about 60 to 70% of your income. If you're paying for it out of pocket, that actually, when you're claiming you're getting the money back, is tax-free, which is one of the few times that is the case. Gotta get the long-term disability insurance. If you have a fully funded emergency fund, you can debate getting short-term disability insurance or not. That's up to you. Long-term, got to. On the flip side, in most financial plans, it says you have to sell like 10 to 12 times your income in life insurance. For most child-free folks, life insurance, not as important. For my soloists, probably no need for it. What happens is your life insurance is supposed to be covering your income for somebody else that relies upon it. So if you're dinks, dual income, no kids, and your spouse could do fine without your income, probably don't need life insurance. If you're solo, probably don't need life insurance. Now people will say, I need life insurance so that they have money to bury me. That's not the same. Life insurance often takes months to claim, and your burial is not months away. There's actually burial insurance. If you want to go there, you can also prepay for things. But life insurance is one of those things that people often sell, but may not be needed. Also, if you do get life insurance, only term life insurance. We're not doing any hybrid or whole life or IULs or infinite banking. No, that's all stuff that, it's not work. All that stuff combines life insurance with investing. And when you combine two things together, it's like a spork. It's a spoon and a fork that does neither job well. You don't need that. Now, the big one for child-free folks, and it really should be for everybody, but big one for child-free folks, long-term care insurance. My goal with my clients is to have a plan in place for your long-term care by the time you hit your mid-40s. That can be either insurance or money set aside, self-pay, whatever it is, you need to have a plan. Here's the reality check. Long-term care right now is about $115,000 a year. Men will spend 2.2 years in care, women 3.7 years. It's expensive. And long-term care insurance is stupidly expensive because it has to cover that expensive costs. Your long-term care policy is actually based on both your health and yours of your parents. So therefore, that's why that mid-40s works well. We have a whole series of episodes on our podcast about long-term care. We actually have a 1-hour episode where I sat down with a long-term care insurance agent who was retiring the next day. So I got all the scoop. Dive into it. Kind of my general rule is long-term care insurance works great for people with somewhere between like $500,000 and $3 million net worth. If you have less than $500,000, you're probably going to end up on Medicaid. Remember, Medicare does not pay for long-term care. Medicaid does, but only after you have paid off, only after you have like no assets. You get used up all your money. Over $3 million, you might be able to set aside money for it. It's one of those things you have to have a plan, but remember, long-term care costs increase by 5% every year on average. So whatever you set aside has to cover that and take into account taxes, all that fun stuff. You need to have a plan for long-term care. If you are going to get long-term care insurance, I prefer, there's a couple policies. There's one company that puts out one policy that allows you either do a single pay or 10 pay, where you pay it all up front or pay it over 10 years. That way your rates don't go up over years. But you need to have a plan for long-term care. Absolute child-free folks, got to have an answer. It's answering that question, well, who's going to take care of me when I'm older? The answer is my money, my plan, my insurance, with some help. And we'll go into the help when we get to estate planning, which is the next chapter.
If you enjoyed the show, please consider leaving a rating or review. We'd love to keep the conversation going. Please let us know your thoughts wherever comments are available or email us at media@childfreewealth.com. To stay up to date, find and follow Childfree Wealth on social media. If you're interested in working with us, learn more by visiting our website, childfreewealth.com. We'll see you next time.